Firstly, to you and your thoughts on the session today.
James, it did look like quite a positive session, closing up about 0.4% in the end. Of course, last week, as you mentioned, we started to see a bit of a mild correction coming through. We were, in fact, off about 3.5% off our recent highs. So it does seem like today's performance has bounced off some of those lows that we were seeing. Although, if we have a look at the performance today, it does look like we have underperformed the US market that we saw on Friday. The S&P as well as the Dow were up over 1%. And, of course, does look like we've underperformed some of the markets around the region as well. I do suspect that investors are still sitting on the sidelines a little bit ahead of our reporting season, which we know is due to ramp up this week. But having a look at some of those best performers today, it really was that utility space, IT, as well as property. We saw financials quite a strong performer as well. We've seen quite a strong sell-off in a lot of those major banks recently, so we saw quite a strong performance across that sector. And of course across materials, that was also quite a strong performer, but we did see that being dragged down by some of those gold stocks, as we did see that spot gold price falling off overnight. But overall, a pretty quiet day on the market, only about $3 billion going through. I do suspect, as I mentioned, investors sitting on the sidelines, but overall, a fairly positive day in the end.
In terms of that sell-off, I mean, down just shy of 8% in the end today. Your thoughts on the severity of the fall and whether or not, we know previously there'd been large short positions in JB Hi-Fi, whether that might have contributed to the sharp sell-off today?
You're right, James. We have seen large short positions and potentially could have contributed today. But really, as you mentioned before, if we had a look at that FY14 result, it didn't look too bad in terms of those net profits, those sales and that dividend, which was in fact up 16.7%. So it looked very strong. But I do think, particularly with these retail stocks, a lot of the focus around this reporting season is going to be on those outlook statements. And given the fact that we are seeing quite elevated PEs at the moment, I think any underperformers or disappointments that we see coming through will be hit quite hard, and we really are seeing that today with the performance of JB Hi-Fi. But I certainly think we saw a negative reaction today, as you've mentioned, those sales that came through for July, which were down 5.5% as a result of those weaker than expected tablet sales. Not only that, though, that FY15 outlook in terms of their sales expecting to be about $3.6 billion, which is only slightly ahead of the FY14 result. And of course, also in terms of that capital expenditure, which is also going to be required for the expansion of some of their store rollouts and JB Hi-Fi Home as well. So I certainly think all of that having a bit of an impact, and of course consumer sentiment as well post the budget, which potentially is also continuing to have an impact on consumers' minds as well. So all of that sort of having an impact. In our mind, coming into the second half, we do actually think that their sales momentum will start to pick up again. We know that they have a new product pipeline coming on board. Some of those home stores will start to be converted in the first half, and we do think that hopefully there will be an improved backdrop in the economy. So overall, coming into the second half, we do still remain quite optimistic on the outlook, but certainly was a disappointment today.
Maybe underweight the banks?
Interesting one. Of course, we have been hearing a lot out from Charlie Aitken. Of course, he's sort of saying that fully franked dividend, you know, creeping up to that 6%. That's obviously going to start putting pressure on these share prices. We know that they work in the inverse to each other. So if that keeps going up, we are going to start seeing some of these share prices falling off, and potentially we'll start seeing investors selling out of them. So sort of a bit of caution there, I do think, and I do think investors still should be in there for those dividends. Of course, they are very attractive, but we are seeing a lot of these banks trading at quite high levels, particularly having a look at Bendigo and Adelaide Bank. We in fact initiated a buy on the stock back on the 6th of May. Since then it's been up about 13%, and that's a huge return over the last 3 months or so. So it is looking quite toppy at this stage. We actually did recently pull back to a hold on the stock. We actually still like the outlook on the stock, but it is looking quite toppy at the moment, and I suppose once we do start seeing some of these stocks pulling back again, that may in fact be a chance for investors to get in, but certainly those dividends still do look very strong and attractive.